Hi guys, welcome back. Now this is Kel once again to basically revise what happened last week, last Friday with some charts. All right, so that's our thing that we want to do. We give you the outlook on the market for today. We revise what happened last week. All right, let's go into the charts right now. Okay, guys, can you see my PowerPoint slides that the Dow Jones? Can you see that? If yes, if you can put a Y in front now so that I know that you can see it. Yes, yeah, Y or yes. Okay. Okay, let's go. Now, last Friday, we saw a very, very big sell off in the Dow Jones because the market basically did three things. Number one, it went below OP, so that's a bad sign already to begin with. Second, it was below MLP, which the market hardly go to the MLP. That's not a good sign. But more important was this MA30. The MA30 was trading at 44,424, which is actually above us, right? So when I saw this itself, when the market actually was sideways, you notice a lot of average, right? When the market basically went sideways, the moving average was all tracked together. So when the market basically on last Thursday closed below the MA30, I know that the Dow will likely follow through because nowadays the system in the world all using a lot of moving averages, a lot of computerized trading. So when the market closed below the MA30, I know that there'll be a system will call for sell and then they will just sell it down like what you see. Okay, so that was what happened on Friday. So let's go into deeper on the index on the day itself on the day. So what happened was very clear that we have this very strong. We were the buying at the start of the day. It's above OP, so everything was good. But only one thing is that the market didn't stay above KTR plus one. So that's was something that I took notice. And after that itself, right? Look here, everybody. Before the sell-off came, the KSI already turned red in color before the sell-off, and that is a very important tool that you must know and remember to take note. Okay, and then after that, I zoom in deeper, bigger for you. Everyone, take a look here. This is where it get incredible. This is where the four diamond is, right? If you place a closing price, you place a line at the closing price, you will notice that the market actually sell down exactly when the market goes below it. Now, I purposely draw a little bit like, like a rectangular with some space there to let you see the impact. So if you buy here, nothing wrong, okay? If you bought here, nothing wrong, all is good. Then when the price will come down and you notice the KSI turns red in color right here, that is where things start to become very dangerous, right? So you can see that the market was still trying to go up, okay, a little bit. Then suddenly it just gapped down and bang. There's some news, I can't remember what news was that. If anybody know the news that created this downside, let me know, put in the comment box. But the main thing is this, guys, I told you many times before that this is the strategy. The market should go to plus one and minus one. The probability is 80 to 85%, right? So when the market failed to stay above opening price and hit KTR plus one, the moment it breaks below the OP, almost, I can say this very honestly, 80 to 85%. Now I can say a bigger number, but I don't want because no point to do that. But you see the market really come down to KTR minus one. So these are the little money you can make in the day itself. And I've been saying this 9 a.m. to 7 p.m. will be the best time to trade for indicator. And that's all. Try not to trade after 7 p.m. Maybe after 7 p.m. the market range might be bigger, but the stress will be painful. To be very tired easily. So I rather you do a positioning in the market, KTR minus one plus one, take the profit already. Then the remaining position let it run. Yeah, remaining position let it run, so that it will run its course. At the end of the day, then if you make more money, congrats to you. If you take back some money from you, at least it's kind of being what they call restricted. All right. So all clear. If all clear, can you press the next number for me? All right. Which is number 8, right? Oh wait, cannot see. 7, yeah. Okay, all right, all clear? Okay, good, excellent. Okay, so this is how the Dow eventually came down. And of course, you can see the Dow, there were multiple diamonds here, which like just tell me, hey, KL, wow, some got 4 diamonds, means surely rebound, right? No such thing. You still have to draw the line and then you see for yourself. Over here, there it seems to be going up, but once it goes below it, you see the selling come again. So you cannot be stubborn. The line is there to guide you rather than just only a set of symbols tell you market bottom and stuff like that. That line will save you. If it's wrong, reverse, flip the position, the opposite attracts. So which means that if everybody believes that this is going to be a very strong bullish signal that it will recover, but yet it doesn't, right? Then the opposite will be true. Understand that? Okay, this trading. What should go left doesn't happen, the opposite will happen even stronger. Okay, all clear, yeah? Okay, let's go to the next market. And this is a NASDAQ. It's the same thing. This time around is worse. The NASDAQ basically tripped the opening price, tripped the MLP, tripped the pivot one, all at the same time. And then reverse course came down all the way, broke below pivot 2, which actually the MA at the same time. Wow, then the selling continued. Now, of course, again, way before it happened, the KSI already turned red. So guys, this is why people pays me good money to go around and explain my system. And people now regionally from different parts of the world wants my system because they realize that what is but is even more or more what do you call better not more better, that's bad English, is that why people will want our indicator, because they want to know this one means what. And I can tell them, say that straight away, there's some selling, be careful. And what is this? Doji. And what doji means? 2 doji, 3 doji. That means very soon there will be directional day. And that's why on Friday, when the market came down itself, whether it's because of news, whether because it's coincidence, because of just technical, it doesn't matter. At least you know what to do in the market. All clear? Yeah? If all clear, press the next number. I think that's number 8, right? Okay, so the intraday, you can see that the market really, well, once it basically U-turn, there was a diamond here, you draw a line across it, the market U-turn, break OP, pump, 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 all the way down, no holding back until it hit here, there's a double diamond, and then after that, the market got rebound a little bit, but once it loses footing again, bam, it came down again and whacked down. Now the green dots because of the MA, okay, and then continue to go down. So you notice that the diamonds, although there were multiple at the bottom, but the market is selling, and we know that before, right? When the market is below OP and below pivot 2, no matter what you tell me, it's a classic sell. So even though the market seemed to be oversold, but the market just continued to bang it down. So guys, that's why I say if you can follow me, trade within the time frame, which is the 9 a.m. to 7 p.m. I can tell you this, that is good enough. You can make that money, the few KTR, enough. Of course, you say, KL, you want to be all the way in, then just hold the remaining residual position. You hold it all the way down to take some profit off the table. Okay? You got it? Yeah, that's how you can do it without getting yourself hit in the market. All right, we'll do one more chart because I'm running out of time. My next meeting is 3 o'clock, so I'm going to rush a little bit. I skip a little bit here and there. Apology on this, right? Because, now this is crude oil and this is marvelous. I love this crude oil so much. Now, basically, I wanted market bottom out, but I also noticed that the KSI was red in color. So when the price was going up itself, right, I was kind of worried. And that was where I tell my friends, be careful. The KSI is red. So when I saw the diamond, I was quite happy because I thought that's a market bottom. I draw the line, right? So when I draw the white line itself, right, the next day the market stayed above it, right? I was like, okay, that is the bottom already. That's what I declare myself. But the next day, when the market opens and stay below the pivot 2, below the MA, below the 200-day MA, I say, gosh, this is bad. So when the market breaks below OP, I quickly cut my long position and turn short instead because I know that you cannot fight a pivot. Below OP, below pivot 2 is a sell. And because the KSI is red, confirm will sell. So, and I know that this is called elephant trade, right, guys? The market goes up, but the KSI is still red. This is an elephant trade potential. So where it goes up, it will be going back to where it came from. Oh my goodness, look at it. The way the market come down is exactly to where it came from. That means the market started bottom here. It went up for 4 days. When the market reversed, it went down exactly to where it came from. And this is not the first time, not a 10th time. This is probably the most 50, 100 times we've seen this in the market. And every time this happened. So I know that a lot of information today, but I want you to remember this today. One shot, a lot of stuff is being shared. And we all know one thing, never fight the market. When the market is below OP, right, guys, it's going to be very difficult to trade. And you can see that the market is just keep on selling. Although the diamonds got pushed up a little bit, but once you draw the white line across it, you know that it doesn't stay, boom, you must call for sell. Similarly, it looks like a bottom here as well as diamond, draw the line. And when you draw the line, you can see that the market just couldn't stay above it, so you need to sell. Got it? So actually, right, if you remember, you can see this now. When the diamond is in a bullish condition, once it crosses above the white line, it's a buy. No need to say. But when the market is bearish condition, right, meaning today is bearish, once the diamond is out, you draw the white line. Once the market fails to cross the white line, you just sell the market. I can tell you, you will make the money. Okay, all clear? Guys, okay, that will be all for today. I'm so sorry I need to rush my time, but I know that today the sharing itself is very important and very good sharing. Okay, if you need to watch this again and again and again. By the third time, I'm very sure you guys can trade very well on your own. All right. Thank you guys for today. I will do the same thing. We'll do the recording up, then pump out the subtitles sent to you. All right, this is really our commitment to you. Okay, guys, I'll see you and you grab some lunch. I'm damn hungry now. Okay, bye-bye.